guys, to Brighten Up Sunshine, where every day is a new beginning. Let me see if I can welcome and everyone drop your comments below. So today is going to be about debt. It's quite staggering when you look at the debt statistics that after the big C word went through, how much debt is not just affecting the individuals, the corporations, our government, trillions of dollars in debt. Has anyone actually looked up the statistics on how long it would actually take to just count to $1 trillion? That alone is quite alarming. See if I can find some of my things here for today's video. If you've never joined us before, we just go over a bunch of different topics in our videos. We cover financial stuff. We just cover some motivation because we all need more of that, and inspirational things, some statistics, heavy data things. But today I just was wanting to say a little bit about the topic of debt because, well, money affects all of us. We need it. We have to go to work. We have to pay the bills, whether we want to or we don't want to. It just to contribute to society. But sometimes do you feel like you're on a hamster wheel contributing to society, just going around and around doing the same thing, wondering why you don't own a home because it's so inflated, why you don't have your car paid off, you have to pay that. How many people actually have their lawnmower financed just to mow a lawn that maybe they don't even own but they rent? Or how many people have bought off this lie that society says we have to have the latest gadget to be the cool kid, right? That one where you got to update your cell phone. You don't even, like, most people don't even own their own cell phone. They make payment plans on it. And so if I can just get out this message to a few people, and that's going to be helpful if people will just share it with their friends and family, and people who also start to break out of the matrix and realize that we don't want to be slaves. We don't want to be owing all this debt all the time to all these people we don't even know, these big corporations, etc. So, for example, guys, have you ever been tempted to sign up? Let's talk about store credit cards for a minute, and credit cards in general. Sometimes these credit cards, it's quite interesting. You're tempted with this discount, and you're not alone. In fact, millions of people fall into this trap alone, and this is how they get us. They trap us by thinking we have to buy that new cell phone. We have to wear these certain clothing brand names. I'm all for ripping the name brand off and being defiant, just saying no more. I'm tired of my value being wrapped up in your corporations. And you're not alone. Millions of people actually fall into these traps. But let's talk about the credit cards in specific. What if I told you that one small discount could lead to long-term debt? Could actually lead to you spending more. And there are psychological traps that are set by these stores to increase their profits. Let's unravel the mystery behind the credit cards, specifically the store credit cards as well, but all the credit cards. Although these store ones are like insane with their interest rates, and credit cards in general are insane, where they're probably 16 to 20%. Store credit cards, 30 to 35%. But let's take a peek behind the curtain. Let's unravel the mystery behind these credit cards. And then let's lay out some actual facts to why avoiding this debt might actually be the best financial decision we could ever make. See, retailers use store credit cards to lure their consumers. They give these flashy discounts. Sometimes these discounts are 10, 20, or even 30 or 40% off. Of course, that first purchase, sometimes for 24 hours. But here is the kicker. Behind the initial discount hides a financial trap that can cost you hundreds, if not thousands, in the long run. Have you ever wondered why they offer it? What's the logic behind it? Are they just loving us and want to be nice to us? I think not. So let's look at the psychological benefits, or should I say, the psychological tricks behind the credit cards that they play on us that is actually no benefit for us, but a big benefit for their corporate dollars. Have you ever wondered why it's so easy to spend more with a credit card? Well, there's actually science behind it. When you use a credit card, there's a brain's pain center. It's actually known as I want to call it the insula, but it's INS as in Sam, ULA. And that part of your brain registers pain. It is actually less activated compared to when you spend cash. There's actually been research done on this, and research has found that paying with cash creates a more tangible sense of loss. And it makes it where you're actually more careful of the dangers with your purchases. But with a credit card, the psychological pain in that brain is actually dulled, encouraging you to spend more freely. They know this stuff. That's why they spend millions and billions of dollars on advertising. They know the tricks that play on our brain. But why don't we know them? Well, because we need to spend more time studying our own psychology, our own makeup. And that's the only way you can actually win, is personally fighting the system yourself, until there's so many that do it that the system crumbles. According to a study, I believe this study was in the Journal of Consumer Research, but I'm sure you can just search it. Shoppers using credit cards are actually willing to spend about 100% more than those paying with cash. So that means if you go in with $100 and you know you only have $100, if you're offered that credit card and you take it, chances are you would spend at least $200. Isn't that interesting? How many times have you been tricked into this? You get the discount and then you go back to make sure you get that discount for, however long it is, or maybe the cashier's really nice to you and you decide to stick your order on the side because you've been approved for so much. So now you're going to make this one big, huge, giant purchase because it was just for one-time purchase. And guys, be nice to the cashiers. Be nice to them, because guess what? Usually they're just there for an hourly pay, which is really not that much money. And they're told to offer credit cards. It's not their fault if you say yes or no. They're supposed to tell you the benefits of the credit cards. That's what they're supposed to do. And here is the other thing to remember. Most of the time, I would say 99.9% of the time, those cashiers are only paid by the hour. And even if they get one of the best record of credit cards because they're nice, well, they don't get any incentive for you getting that credit card. Guess who does? That's right, the managers. The managers. And guess who's usually not up there running the cash registers? The managers. So be nice to the cashiers. If you don't want the credit card, which I'm going to suggest you think and do your own research for, of the benefits versus the not benefits, which we're going to cover today. But just say thank you, but no, thank you. No. And maybe with a smile, don't be so hateful with them. So let's get on to this. Let's look at this key stat. 12 to 18% is spent more on average compared to cash buyers with consumers who have credit cards. It doesn't matter if it's a debit card from your bank. Think about that. That pain center is not activated the same. Cash is king. That's why they don't want us to use cash, because it seems to somehow or another make it less painful to spend with our debit or our credit cards. And actually, Dave Ramsey's been talking about this statistic for years. For years. There's actually an illusion of saving when you go for the discount for the credit card offer. In fact, it looks quite appealing, right? But here's the reality. Stores are using this illusion to actually hook you into long-term debt. Let's break this down and peel back the curtain. The average store credit card comes with an interest rate of around 25%. I've actually seen some much higher than 25%. And let's say you buy the $200 worth of clothes and you get the 20 or 30% off. But let's, for statistics here, let's look at the 20% off. So you got 200 worth, you save 20%. So now you're paying 160. That's great, right? I mean, you save $40. These people must love you. But if you do not pay that balance off, the high interest can wipe out any discount you've received. An average APR of 25% on a balance of $1,000 would cost you $250 in interest each year. That discount does not seem or feel so good right now, does it? It makes me mad when I realize the psychological games that advertising plays on us. We have to wake up to these facts. They're out there. Interest rates and debt is a trap. Credit cards are notorious for the sky-high interest rates. According to a report that was on, I believe, creditcards.com, the average interest rate on a store credit card was 25.64%. Again, I've seen them higher, 33, 34, 35, significantly higher than the regular credit cards, which on their own is high, just regular credit cards, like on average 16 to 20%. As of 2021, Americans paid over $120 billion in credit card interest and fees. Guys, that's insane. What could we do with $120 billion? These credit cards are contributing significantly to the number of debt that the people have. Stores are hoping you carry a balance. And with such high rates, it becomes incredibly easy to fall into a debt. Late fees and penalties and compounding interest. Well, before you know it, it's a snowball headed for nowhere, turning a simple shopping spree into a debt nightmare, leading you to a life of a debt cycle trap. It's not just interest rates you have to worry about either, guys. If you're late on your payments, let's just stop there for a second. Many store credit cards and credit cards in general will hit you with some of the highest fees if you're late. But even worse, these credit cards can keep you locked in that debt cycle and you're not free. The more you spend on these high interest cards, the harder it becomes to pay them off. According to the Federal Reserve, the average household credit card, last time I looked, was around $5,733. With interest, well, that piles right on top of that. And it's easy to see how the credit cards could continue to contribute to the growing national debt of the public's debt, not just the government's debt. But the government has its own problem, as we're going to see more and more of unless this is dealt with. The government has debt of trillions and trillions. And the only reason a lot of the households don't have that is because they limit how much debt we can get into. Store credit cards and credit cards in general also impact your credit score. Opening the credit cards does not just affect the wallet, it impacts your credit score. Every time, in fact, that you open a new credit card or get an credit card inquiry, it results in a hard inquiry on your credit report, which in turn usually lowers your credit score temporarily. But if you carry a balance, you actually increase your credit utilization ratio, one of the key factors in calculating your credit score. In fact, I've read somewhere that credit utilization accounts for about 30% of your credit score. So if you're using more than 30% of your available credit, your score can take a serious hit. So there's obviously dangers in having one credit card, but opening too many can actually reduce your overall age. And that's another factor that plays into your overall credit score. So, but if you've got a lot of debt, you don't really care about your credit score, do you? Most of us, if we've dealt with debt before, we get to a point where it's like your credit score is almost laughable. And so that just leads me to thinking you're better off paying cash and you're more free. That seems to be the only solution, to pay cash. Because if we pay our debit card, then we don't activate the paying center and we still spend more than we should. And then we have bank overdraft fees, right? Because they're nice, they'll let us overdraft and then charge us. Ugh. But when you use cash, you're forced to think more carefully about every single purchase, and there's no deferred payment, no compounding interest, and none of those sneaky little fees. In fact, using cash has been shown to reduce spending and makes you more mindful of your financial decisions. There's been studies that show consumers who pay with cash are far more likely to stick to a budget because guess what? When the cash runs out, you start asking the nice cash register person to please take that off. You don't have the money for it. You also avoid impulse purchases and sticker shock because how many times have you mindlessly got up to the cash register and the cash register person is ringing and then you say, "What did that ring up for?" And then you realize that the price it rang up for was right. That was the price advertised. You just didn't keep track of how much you had. So you think you're going to go out with 40 bucks and you're sticker shocked because everything is now 120 bucks. How many times do you actually not even add up the stuff that you throw in the buggy and then get up and realize that that was way more than you thought it would be? And if you knew that it was going to be that, then you wouldn't have bought it. Makes me wonder if that's why some of the stores are actually starting to remove some of those self-price things where you can scan it yourself, because they've figured out when we scan it ourselves, we are becoming mindful of how much it's actually going to cost us. So again, one of the most powerful ways to stay out of debt is to adopt cash only, which is also another way of being mindful of just being debt free. This means you only purchase items you can afford and prioritize saving over instant gratification. Delayed purchasing until you have the cash on hand can actually help prevent long-term financial stress. Remember, just because you can afford a discount at a store that's offering a store credit card does not mean you're saving money. You're likely setting yourself up for more debt, stress, and financial trouble. At first glance, the store credit cards and credit cards in general seem like a really good deal. But behind the discount, guys, you're walking into a financial trap with sky-high interest rates, psychological spending tricks, and the risk of long-term debt. These credit cards are a slippery slope. And by paying with cash and only buying what you can afford, you can avoid the pitfalls. Stay out of debt, protect your family, your peace of mind, and keep more of the hard-earned money that you have in your pocket instead of more stuff we don't even know we have. What's you guys' thoughts on this? I hope that you can gain some value out of this today. And I hope that you stay informed, stay debt free. If you're not debt free, start making it a mindful practice of yours to be debt free. Delay the gratification and just be more free in general, because not only are you debt free, you're just more free, because the borrower is going to be slave to the lender. It's a lot easier, in fact. Let's talk about this. I know there's been a lot of job layoffs, and hold on just a second. Let me take this. You're going to have to hold on. I'm in the middle of a video here, live. So I'll wrap this up here because I got to take this phone call. But basically, if you are debt free, you're more free in general. So I know there's been a lot of more layoffs and announcements in the news. That is stressful in general. But then if you have a bunch of debt on top of that, and then you find out that you're laid off, now your stress is just increased. And all those nice people that offered you all that credit card with a nice smile, you were just another number. Now it's just a snowball headed down south or north or wherever. It's just headed down, if you get what I'm saying, because it's just going to be like an avalanche. It's going to be one call of a debt collector after another, late fees, interest rates increased, penalty charges, and it's a nightmare. But if you get debt free and you get a layoff, or you don't like your job, sure, it sucks, but that's still going to be more freedom in it, because you can say, listen here, manager, not so nice knowing you, but I'm going to be fleeing over here or over there, because you aren't such a slave to them anymore. You don't have to have it, because you got to pay for things that you already have. So I think we could all use a little bit more of self-discipline to be delaying instant gratification. And I'll wrap it up there. And just become an informed consumer before you sign up for every offer out there. All right, guys. I hope that you found this helpful. Remember, this is Brighten Up Sunshine, where every day is a new beginning and the sun always rises. So see you in the next video. Hey. Yeah. Let me make sure I turn this thing off.